Thanks for joining us at the Business Growth Café, where each week we select from a menu of topics for a focused discussion with an industry expert to provide insights that can impact your business's growth. With your host, Angelo Ponzi.
Hi, I'm Angelo Ponzi, your host here at the Business Growth Café, and thank you for joining us. Today, before I introduce my guest, I really want to talk a little bit about small businesses and their aspects of looking at their financials. Now, I've said this before, I'm a believer that most small businesses really don't understand the story that their financials are telling them. Now, don't be calling me up and complaining, but you know it's true. So today on the show, I have Ken LaCroix, CEO of Insightful Partners, to discuss his mantra, what gets measured gets done. So as a business owner, you're busy working in your business as opposed to on your business. And you've heard me say that so many times on this show. The day-to-day burden, right? We're always out doing our marketing or our sales or operations, or your wife's giving you a phone call, a lot of distraction. And you're really not focusing on that, and you can become overwhelming, especially when it comes to reading your financials. So Ken, welcome.
Thank you, Angelo.
Yeah, there we go. A little hyped up. I'm hyped up today.
All right, let's do it.
A lot of coffee. I think I was up early this morning. I think I'm about 6 or 7 cups in. So if I talk a little rapidly today, folks, you know why. So before we get started, let's put you in context to the audience. Tell the audience a little bit about yourself and your business.
Sure. So we concentrate on helping business owners understand their numbers. We have a long background in accounting, chief financial officer outsourcing, those sorts of things. So we kind of want to take their numbers and put them in a new way to look at them.
Okay. So that idea then that I talked about, storytelling, I'm a big believer that the numbers tell a unique story. And hopefully it's not a mystery or it has a sad ending, right?
So numbers tell a part of the story. So part of our process that we go through is we want to see the numbers and what they're potentially telling us, but there's usually a story behind them, right? There's a trend to the numbers. There's not just one single number. There's numbers in context with other things. So we like to talk about what is the story behind the numbers? What are the numbers telling us? What should we be looking out for as we want to tell the story going forward?
Okay. So many times I think businesses look in the rearview mirror. You know, what has happened, you know, what was the cause of all that? And it really becomes a challenge to predict the future and look to the future, and how do you leverage that? So what kind of insights on how much time do you spend looking in arrears through the rearview mirror, right? A Bon Jovi song. Don't look in the rearview mirror unless you plan on going backwards, or whatever that saying was. But how do you balance that with your clients?
Sure. Well, let's remember that the definition of accounting is looking backward. There is no forward-looking statements. There's no forward-looking projections, if you will, in a regular financial package from your CPA or from, GAAP-related financials. So we use those numbers to check in. We use those numbers to see what trends might be there, but those kind of form the basis of what we might be looking for. So what we do with our clients is we get them used to estimating the future. And a lot of people think that their estimates, their budgets, their forecasts have to be highly accurate, and they don't. Just the process of going through and estimating what might happen with sales, estimating what might happen with gross margins, estimating what might happen with different activities gives some insight for when we do measure against that and we miss it. Maybe we miss it by a wide margin. The issue is not missing it. The issue is, why did we miss it? And so by constantly projecting the future and then constantly seeing how you're doing against the future when that time comes, creates sort of a root cause analysis mentality with people. And it gives them sort of a muscle memory on how to predict things better next time. And so we find over time that they get better, the companies get better, the teams get better at predicting the future, and that gap sort of narrows in a little bit. And just by doing that, I think it helps them concentrate on the key drivers of value in their business.
Okay. So there's a little bit of guesstimating, or throwing it against the wall and
Absolutely.
see what sticks, right? But to your point, which I find really interesting, is it's okay to be off as long as there's some context and understanding of why you were off. So we're constantly learning.
And I think that's the biggest struggle, I think, with business owners, because they're used to being right. They're used to hitting targets. They're used to exceeding goals. And the conversations we have is, look, it might not be estimable completely, but it's partially estimable. So why wouldn't you want to know a little bit more insight into the future and see how that is? Even if you miss it by a wide margin, it's better than not thinking about it at all.
Okay. All right. So I want to go back just a little bit, and there's a couple questions I always ask my guests. But the first one I want to ask you is, what is the best business advice you've ever received and or given if it's different?
Sure. Well, they are different. So the best business advice I received, I was fortunate at a young age in college to be able to meet the chairman of ARCO, Atlantic Richfield,
Okay.
a gas company, the fuel company. And sitting at the top of this Arco Tower in downtown LA was a little intimidating, but a very nice conversation. But the key takeaway for me was he said to me, do what you enjoy. Do what you really enjoy, because you're going to spend your whole life doing it.
Mm-hmm.
And there's been times in my career where I've enjoyed things, and there's been times in my career where I haven't. And I look back upon my whole pathway, and the times that I was doing things I enjoyed, I seemed to excel at, and my whole life was good. And those times where I wasn't in those situations, it wasn't as good. The advice I give to my clients on a regular basis, and my clients are entrepreneurs with sales of $1 million to $50 million in sales, all that. I say concentrate on 2 or 3 things that you're going to accomplish in the upcoming month or 3 months. There's so many things entrepreneurs can focus on. The advantage of entrepreneurs is that they're flexible, that they can move on a dime, that they're very agile. The downside is that they can end up concentrating on a lot of things that don't end up in completion. So we talk about basically get 1, 2, or 3 things done in a 30, 60, 90-day period, and then go off and do all those other things.
Okay. All right. So really setting objectives that can be accomplished within that particular. So they feel like they're moving forward, right? They're gaining and they're doing.
And
something.
staying focused on it, right? Because it's that last mile that's the hardest. We can talk about a new objective, a new plan, but seeing it to fruition, seeing it all the way through, seeing it to completion is, I think, one of the biggest challenges in entrepreneurs today.
Yeah, and I think there's that kind of 4 quadrants with Stephen Covey, right? That's the urgent, there's the important, and distractive, and all those other things.
Yep.
I sometimes fall in that 4th quadrant, watch a little too many Netflix binge watching, right? So it's a waste of my time. But to your point, we tend to get focused on those things that are maybe urgent or distract us versus really setting those goals that we need to accomplish to move our business forward.
Important and urgent takes the day every time. There's no shortage of clients reaching out, no shortage of employees coming with problems, no issue, no shortage of supplier problems. At some point, we do have to work on the important and non-urgent things. Mm-hmm. And if we can get 1, 2, or 3 of those important and non-urgent things done, I think you're setting yourself apart from the vast majority of other businesses.
Okay. And that back to that original statement of working on versus in. Okay.
Correct.
The second question I want to ask is, where's my question? There it is. What keeps you up at night when you think about growing your business?
I'd say for me, it's trying to find a way to scale my business. It's the hardest thing I think entrepreneurs do is hand off control of their business in many areas. And for businesses to grow, they need to hand off that control. Yes, it's true I can do everything in my business. And it's probably true that I'm the best at all those things in my business. Mm-hmm. But at some point I run out of time, I run out of daylight, I run out of energy. So it's how do I find other advisors to bring on board and help spread the insight? How do I find other technologists to help us do more implementations? It's all the things we're doing is fairly new, and so there's not a skill set out there that fits this. It's more of an outlook or an approach or a background. So trying to find ways to scale my particular practice is what keeps me up at night.
What you just described has been your biggest challenge in growing your business, or what has been your challenge?
My biggest challenge is letting go of it.
Letting go.
It's really what I counsel my clients on as well. It's actually letting go and handing it off to somebody, even though it's not perfect, even though it's pretty good. And I think, again, we hold ourselves to high standards, but sometimes perfect, sort of gets in the way of good enough.
Sure. Part of this and what I do here on the show, of course, is to offer some education, advice, and guidance to the listeners. And that sounds like lesson number 1, right? Let go, do some delegation, have confidence. Make sure you have the right people on the bus. I'll quote Jim Collins, and that you feel comfortable that can help you free you up to do other things.
Well, and actually get out of your comfort zone, because it's not comfortable. It's just not comfortable to hand over that control. You by definition, you don't really know quite exactly what's going on, but you have to trust that process.
Okay. So I'm going to go back a little bit before we talk about some more about the financials and the storytelling. But you're own your own business, but go back in your history, you didn't, right? So you went from that corporate accounting through directors, presidents, consultants. How did you make that leap? For those of you out there on the corporate side listening to this show, sitting in the cubicle, being an accountant, and you're thinking about you want to be a fractional CFO, what was that motivation? What prompted you to make that move?
So I think in the background of me growing up through all those positions, I always knew at some point I would be a consultant. But the hardest thing to do is jump out and do it. I was fortunate or unfortunate enough to be forced by sort of the 2008, 2009, troubled times, if you will. It was a very difficult time to
put it very nicely.
Right,
by the way, yeah.
right. It was a very difficult time to get a job as a CFO. And so I thought, well, it's sort of now or never. Let's just jump out and do it. So for me, the fact that the risk was lower really helped. But I always knew in the back of my mind that I would do it. And I'm, in retrospect, really glad that I did it. It's been a wonderful run over the last 10 years, and I'm looking forward to another 10, 20, maybe even 30. We'll see how we do.
Yeah, that's fantastic. That first step is really hard. I've had several opportunities or helped several businesses, but the one in particular when it started my second business, I was working for an ad agency and I was actually trying to buy it, and they broke the deals off. I got mad, and that was my impetus to take that first step and go out and start my own business as a consultant. And many years later, I'm glad I did. Recently, you and I were in a meeting together, and you're making a presentation, and you made this statement, and I want to read it, and I want to explore it. You said, "I find it interesting." I said that. Sorry. I realize in 10 years of doing this and trying to sell business owners on the value of accounting is they don't value it, and they don't value it for a number of reasons. Explain.
Sure. Well, coming from the accounting world, it's a bit of a heretical statement, but I think that for the businesses that we deal with in our firm, business owners and managers were there when it happened. So there's not a lot of news value to the financials, and they keep talking of, all their advisors and the coaches all say, you need to know your financials, you need to look at your financials. And I think they do, and they try, but at the end of the day, there's not a lot of news value to knowing that sales went down because they were there when the customer changed their order, or the fact that gross margins are compressed because they signed the contract for the new price increase. The balance sheet, that's not how they run their businesses, right? They don't reserve for warranties in their mind. When a warranty claim comes in, they fix it and send it back out again. So it's important to remember that those financials are meant for the outside world. They're not necessarily meant for the owner and manager. They're useful at times to the owner and manager, but they date back to the Securities and Exchange Act of 1933. They're designed to prevent fraud in the investor marketplace. So they're there to help the bankers, stakeholders, creditors, other people that might want to purchase your business, help them understand your business and how you relate to other businesses in your space, and then how does your space or industry compare to other industries. That's what they're truly there for.
Okay. All right. Interesting. When someone engages you, what's their pain point? Why do they pick up that phone and say, Ken, I need your help?
Sure. They want to make better decisions with data, and they're frustrated because they can't. And a lot of times the accounting department is the one holding them up because there are, again, accounting departments don't think about the future. Accounting departments think about the framework of accounting and how can we fit this activity into the framework that we've decided is best for investors, not necessarily the best way to understand the numbers.
Okay. I give presentations on implementing a brand checkup, a brand health checkup. So same question for you is, how often should a company, I'll call it a financial checkup for the business? I mean, is that something they do every month, or is that a quarter, or is that a year, or is that annual strategic plan that everybody kind of waits to, we'll do it on the annual planning process, but that's way too late for me.
Sure, it's a great question. And I think it depends on the cadence of the business and the type of information that you're looking at. So from our perspective, there are yearly things that we do. There's yearly goals and there's yearly targets. Heck, there could even be a 10-year target. But there's certainly quarterly check-ins because during the course of a quarter, most of the seasonal noise might have gone away. So those are very, very valuable numbers to look at. There's monthly numbers we look at. Every time the month closes, we review those monthly financial numbers. But there are also weekly numbers we look at. We look at cash flow numbers on a weekly basis. And in some cases, there's daily things we look at. We look at sales by day or number of customer calls by day or some sort of metric. So checking in on your business, it really depends on what you're trying to accomplish and what that cadence should look like.
Okay. And I'm assuming that varies by industry and the type of business, right? So it isn't a form. There's a formula to it, but it's not formulaic in the sense that it's going to vary. Because my next question is about KPIs and really establishing those. We do that in marketing, right? What are those milestones? What are those objectives? And I assume it's the same on the financial side. So, what are some obvious KPIs that our listeners should, at a minimum, be putting in place when they think about their numbers?
I can think of 5. We always start with our clients with the top 5, and there's a reason behind these top 5. Number 1 is revenue growth, because that's what an outside investor at the end of the day is going to look at. How well can you grow your revenue? The second one is gross margin or gross profit, and that decides how profitable you are with those sales. Again, that relates to efficiencies and effectiveness, and we want to see gross profit growth. The third one we like to look at is what's your total return at the end of the day? What amount of money is being returned to the investors, to the stockholders, to the people that own the business. What does that number look like, and how is that growing or not growing? And then I sort of throw in two others. One is sort of an efficiency measure. We take revenue and divide it by the number of employees that you have. And we can do that at the end of the year or at the end of the quarter. But if we compare that, if we just take revenue and divide it by the number of employees that you have, we can see sales by employee. And if your sales are going up, but your employee count is going up faster, then we can see that immediately that that's a lack of efficiency. If it goes the other way, then that's a leveraging of what you have. And then the final one that we like to talk about is more of a balance sheet metric. And it's really just what is your current or quick ratio? How much funds are available quickly to pay off the debts that you have? I find a lot of times people don't quite understand how close to the edge they might be with credit card loans, accounts payable, other loans, compared to the receivables they have, the cash they have on hand. Because again, as sales grow, that eats up cash, that eats up resources.
Okay, all right. And you've mentioned kind of some of the reports that become essential, but just I'll clarify and ask that question. If I'm a small business, which I am, of course, what are those 3 or 5 reports that are really essential that I'm paying attention to?
Well, the reports look in the past. So by definition, they're not as helpful as they might be going forward. There's no standard report going forward. It's bespoke to whatever you're trying to accomplish. But at a minimum, the income statement, and we have a couple different ways of looking at that. So how does this month's income look compared to last month's income? How does our year-to-date income look compared to last year-to-date's income? How does this month's income compare to this same month last year? And the balance sheet, of course, is a very important measure for some of those same things.
Okay. So as you started your kind of next evolution in your business, you just recently launched some technology.
Yes.
So I want to talk a little bit about that, because when I think about accounting and finance, I mean, it's the guy with the visor and the armbands on, doing a lot of calculator stuff. Right?
We still do that, by the way.
And you do that. I also think of poker games when I see that guy too.
Right. Yeah.
And but you've implemented a kind of a forward-looking technological piece of software. I can think of a better way to describe it. But when I saw it, it was eye-opening and exciting. I'm still a marketing guy's going, the numbers look exciting, because it really offered a lot of insight. And so I want to talk a little bit about that, because that really seems like a real strong point of differentiation for you. And I think before you talk about it, that's really important when a business is really, how do they separate themselves from their competition, right? You're consulting, fractional CFO, and offering those types of services. And if I could say, yeah, what do you offer different than this guy over here? Because, hey, you're both looking at the numbers, you're both reading the same report. Well, this really is a true differentiator for you. But more importantly, it's a really cool piece of technology. And ready, get set, go.
Perfect. Thanks for that lead in. So it's a really exciting time in technology. So we get sort of jazzed up about accounting and technology and where that's going. And we're moving from banging on the keyboard to get data entry in to grabbing data wherever it exists digitally and doing some aggregation with that and some comparison with that. So the tool that you saw is one of many tools that we use. They're not developed by us. They're off-the-shelf software that anyone can implement. But the beautiful part of it is it's no longer heavy lifting to get the data input, stored, or evaluated. Those things are very inexpensive to do. And the more data that you have, the more trends that you can find, the better you can help predict the future. And we do think it's an exciting way to look at things. We think that printed reports are fairly boring. We think that dashboards and graphs and charts and relevant information and relevant dialogue is very important. And we concentrate a lot about how to run those monthly meetings, how to run a meeting more effectively. And it usually doesn't start with paper reports.
Mm-hmm. Well, I think you're playing into the trend, obviously, as more millennials, if you will, are getting in upper management and being the people responsible for reading those reports. Being digital and online and it is really very important. I mean, they don't really read paper. I mean,
Yep.
You get a little older, yeah, we still want some paper in front of us. If you're looking at my desk here, you can see a lot of paper, but that generation is not going to deal with it. So you're really, my hat's off, you're kind of on the forefront of all this and really setting the tone of how accounting and financials can really be viewed.
Thank you. We think we are. Yes.
Yeah, that's really exciting. So tell me a story. I like stories. Tell me a story about a successful engagement, and then tell me a story about a not so successful engagement and kind of the reasons why.
Sure. A recent successful engagement we have is a company that's been growing, call it 40% year over year for about 4 years. And they were a bit constricted in their accounting. Their accounting processes and procedures was, 10, 15 years old. they were waiting for their CFO to retire. And that took a little while to negotiate, and that finally happened. And we were able to come in, and I think the business owners were concerned about all the activity that was happening in their business because they were growing so fast, but they didn't feel like they had a handle on it. Mm-hmm. The financials were published 30, 60 days late. There was always a lot of variation in them that was difficult to explain. And so we were able to come in and immediately start figuring out what are the 5 or 10 things we should be looking at. And some of those were the things I mentioned earlier, and some of them were a little more bespoke to their business. And we just started focusing on, again, what should we be targeting? And why should we be targeting that? Should we be targeting that because of our strengths, because of our industry strengths? What are the true value drivers in our business? So we were able to implement some streamlined accounting procedures and policies so they could close their books much faster, but also create things for them to look at to gain comfort or discomfort around what's happening in their business.
Okay.
The unsuccessful engagements we have, I'd like to describe it, our approach is that we want to find the business owners and teams and management teams that want to make better decisions with data. If someone doesn't, then our sort of services really don't fit because we're bringing insight, clarity, and accountability to the team. And I think there are a number of business owners and teams that lack that accountability, mm-hmm. and they don't necessarily want to fix that. So our job is not to convince everyone they should be making better decisions with data. It's to find the ones that want to and help them do that better.
And I really appreciate that. Years ago, we were working on this RFP, and there was a question in there that I thought was brilliant. And the prospect said, describe your ideal client. And my response is that one that lets us do our job and wants us to do our job. And I say this all the time because I had a prospect call me, I don't know, it was about 6 or 7 months ago, and long story short, it said, I'm not a real big believer in marketing, but you've been recommended, convince me. Uh-huh. And my answer was, I'm not going to. I don't want to put myself in that situation because if I convince you today, I have to convince you tomorrow. So how we doing, Paul? Almost there? A couple minutes? So 2 more questions I think I've got. What is the biggest mistake you see small to medium-sized businesses making?
I would say there's a focus on growth, and there's a lack of focus on profitable growth or sustainable growth or even affordable growth. So when businesses grow, they consume resources. So by definition, if your sales goes up, chances are your accounts receivable is going to go up. So if you're not managing those receivables, that's where all your cash lies, and you've now grown yourself into insolvency. It can be fixed by collecting your accounts receivable, but just keeping an eye on that sort of thing.
Okay. And one last one. So we've covered a lot of topics today, pretty rapidly actually. We were all both hyped a little bit, but when you're thinking about the listeners out there and looking at how they can grow their business, any parting 2 suggestions, tips they should take home today and implement in their business?
Take a moment to step back away from all the noise and think about what are the true value drivers of your business. What are the things that happen in your business that make the most difference? What are those customer channels? What are those product lines? What are those geographies? Where do you find the lowest hanging fruit, the highest profitability, and the areas that really make a difference in your business?
All right, fantastic. Ken, thank you so much. Let's tell the listeners how they can get a hold of you, your website, your emails, all that good stuff.
Sure, we're Insightful Partners, insightfulpartners.com, Ken at insightfulpartners.com. LinkedIn is Ken LaCroix, so easy to get a hold of.
All right, well, fantastic, and I encourage everybody to do that, and especially you got a brand new website. I was gorgeous. I actually was showing it to somebody today and said, that's kind of what we need to do. It needs to be really clean like that, so congratulations on that. And thank you out there for joining us at the cafe today. You can find out more about me, read my blogs, view my show videos, or sign up to receive future information at theponzigroup.com or connect with me on LinkedIn. That's the best place. And if your business is ready for growth and you need a CMO, but you're not ready to hire a full-time person yet, connect with me. I'd love the opportunity to explore the benefits of working with a fractional CMO. Or if you're a small business looking for a business coach or some advice, also reach out to me as well. Lastly, please subscribe to this show. And if you're already a subscriber and you're enjoying it, please encourage others to do the same. We're on all the major podcast platforms, or you can go to my website at thebusinessgrowthcafe.com to sign up. Thank you very much for joining us today, and we hope to see you next week at lunch at the Business Growth Cafe.
Thank you for listening to today's discussion at the Business Growth Cafe with your host, Angelo Ponzi. Take a moment to subscribe to this podcast and visit our website at www.businessgrowthcafe.com. Read Angelo Ponzi's blogs at www.theponzigroup.com.